David Frost, mystrategicforecast.com. You're looking at an intraday or 10-minute chart of the SPDR or SPY, which mirrors the S&P 500, and you're looking at a down day. So Tuesday started here, we went down, we made a little bit of low here, tried to bounce back, failed, and then was down the rest of the day until we made a low here down at about 187.07, I think it was. And basically once we made this lower high and continued down, it was in the cards that we were going down farther. And from that point, once we broke these lows, we went down about another point in the SPY, which equals about another 10 points in the S&P 500. So we had a down day on some decent volume. We had over 100 million shares in the SPY. In fact, the volume today was, what was it? No, this is an intraday. So let's go over to the daily chart. We'll get the volume real quick, and then we'll talk about the daily chart. Volume today was 111 million shares. And what we have here on the daily chart is we have some sideways consolidation. And with the sideways consolidation, we can still see that down move out of this pattern. But I still say that during this week, before the Memorial Day weekend, your downside target is about 185. I don't see much more than that, maybe 184.5. If we were to go down the next day or two, it would be Wednesday or Thursday, you would probably see that action. If we start down tomorrow, I think it's a good bet that we're going to see further downside back into this 185 area. But before the Memorial Day long 3-day weekend, you're typically not going to see a larger sell-off. It could happen, but you typically won't see it. That's just the probabilities. So after the Memorial Day weekend, we'll have to see what the pattern looks like, and we'll make our determination then. But for the next couple of days, certainly down is the path of least resistance, and we'll see where that takes us tomorrow. But we're waiting for a real good setup to take a trade on the SPY. We've had some stock trades out there, and we've got some other things brewing. But for the S&P, we've had a lot of this back and forth motion, and there's no real great trade setup. I see one maybe developing here, but not ready yet. So we'll wait and see. Let's take a look at the little longer term, the weekly chart of the S&P. And here's what you have to be aware of. You have to be aware that this is bullish. This is in an uptrend. You have a good spread between the 20 and the 50 week moving average, and you're above all the averages. So this is in an uptrend. So until you come down and break this area down here at 180, let's say 181, this is still in an uptrend. Maybe when you break the 50 here, but up until that point, this is 20. But up until that point, this market's still in a weekly uptrend. But let's take a look at something a little bit different, which are the Qs, okay, the NASDAQ market. And let's go right over to the long-term chart on that one on the weekly basis. And here you have a whole different picture. You're underneath the 20-period moving average on a weekly basis. You're making basically bearish consolidation here for what looks to be about 6 or 7 trading weeks here from this bottom. You got 1, 2, 3, 4, 5, 6. Okay, you're in the 6th week. If you stay below this area here for the next week or two or longer, this spells trouble. And the same holds true if we look over at the IWM. And the IWM, okay, is already melting away on a weekly basis. Now you're below the 20 and the 50 moving average, and this thing is weak. So I told you before in some previous videos, 105. I think 105, which is basically this pivot high here. 105 is in the cards before the Memorial Day weekend if we have another weekday or two. So look for the IWM to move down to 105 and find some support. Could be good for a bounce, maybe a few point bounce into next week if that happens. But we'll see what the trade setup looks like then and take it from there. Let's move over to the gold market. All right. A lot of subscribers like to play gold, but right now there's really no trade in gold. Here's your weekly chart, and this is not a healthy chart. Your 20 and 50 period moving average are getting squeezed together. This was a down move. You're gone sideways. This could be called a pennant formation. It's a triangle formation. There's a lot of names for this formation, but the bottom line is that a lot of times these triangles that form after a down move will continue down farther, about the same distance that it went down in the first place. So from here we have about 133 down to this point here, 125. So, you're looking at 8 points. So can there be 8 points on the downside? Easy. Yeah, sure. There can be 8 points on the downside, 10 points on the downside down to 115, 117. Sure. So that's why I wouldn't be playing gold long here. But if you look at the longer term, the monthly chart, gold may be putting in a bottom here for a while. We'll see what happens. But if we can hold this low here, we can go higher later on this year. But we have to hold this low. If this low doesn't hold, then it's game on, and you can see down to $100 in gold if this low breaks here. So we'll play that by ear. That's a long way off. Nothing imminent there. On a daily chart, basically you're just chopping around. So there's no trade here. This is a bearish pattern. So, if you had to take a trade, I'd have to go short, but I don't take a trade when the trade setup doesn't say take a trade. Let's go over to the oil market, and we'll look at the USO. And the USO has been pretty strong. And again, this is a strong market. I wouldn't be short this market at all. It looks like USO wants to make a run at this double top around 37.5, 38. And that looks like it's very possible from here. We're not that far off. So I would look for some more upside. You always have the geopolitical issues around the world with the Middle East, the Russia and Ukraine. You have stuff brewing in China now all of a sudden. And so, playing gold on the short side is almost like a little bit of Russian roulette, because you can wake up one morning to a 5-7 point spike in the price of crude oil, and crude oil trading over $100 could spike up to 112 in a minute. So we're not going to be short crude. That's not a prudent play. We only take trades that tell us that it's time to take the trade. And so do we want to look at anything else? How about we want to look at the XRT? I talked a little bit about that in a post earlier. And the XRT is real weak. The XRT represents the retail index, or all the retail stocks that make up the XRT is represented here in a downtrend. This is a daily chart. Let's go a little bit longer. Okay, let's look at a weekly chart. Okay, this is a bearish pattern. This is a high, a lower high, bearish consolidation. This chart wants to go lower. You're going to go down to 77, 76.82, and then you're going to make a headway stop at 73, 74, and then you're going to keep on going if this thing remains weak. And if the media begins to talk about the economy being weak, and the Fed ended up to be wrong once again, and that's an interesting point. I want to digress for a minute, because today you had a down market, and like clockwork, you had some of these Fed presidents coming out with their commentary, and everybody tends to listen to what the Fed says. And I can never figure out why, because if you go back in history and look at the Fed's forecasts, they're wrong at least 50% of the time. So they're no better than the average Joe on the street. So why do we listen to the Fed's forecast? We shouldn't. And we don't. We look at the charts, and the charts tell us what to do. And the XRT is telling us that there's weakness out there in the consumer stocks. Retail sector is consumer stocks. And if the consumer is weak, the economy is weak. And if the economy is weak, the market's weak, or vice versa. Either way, it all points to the same thing. It's going to be a tough summer. It's going to be tough sledding ahead. But I'm going to help you navigate, because there's going to be fantastic trades out there to be had. When you look at the volatility pickup and the swing trading opportunities, both on the long and the short side, we're just going to have a ball this summer when the volatility picks up. So I've got my notebook out. I'm making notes on what charts look like they're setting up just for the right pickings. We can lick our chops at the right time, and that's what it's about. It's about timing it correctly, and that's what we're going to do. So we're going to make it a wrap here for today. It's a quick update on what I think the market's going to do over the next couple of days. And once again, happy trading, and we'll see you on the next go around.